market landscape for the week ending January 16, 2026, and the outlook for the week beginning January 20th, 2026. The real estate and consumer staples sectors emerge as the clear winners, gaining 4.20% and 3.10% respectively. Key sector drivers. Real estate. Investors rotated into high-yield assets amid broader market volatility. Consumer staples. Defensive positioning dominated as recession fears and tariffs resurfaced. Industrials. Mega-merger rumors and infrastructure spending fueled steady sector growth. Energy. Geopolitical tensions and record gold prices boosted commodity-linked equities. Utilities. Falling bond yields made high-dividend utility stocks more attractive. Materials. Record silver and gold prices supported mining and resource companies. Infotech. TSMC's massive capex plan bolstered long-term semiconductor demand outlook. Healthcare. Mixed earnings and regulatory uncertainty pressured major pharmaceutical giants. Comm services. Concerns over AI spending sustainability led to tactical profit-taking. Consumer discretionary. Tariff threats and high interest rates weighed on luxury spending. Financials. Trump's 10% credit card interest cap proposal hammered bank sentiment. Here at the Stock Market Performance Playlist is this week's Stock Terminology Learner. Top frequently asked questions. What is Core PCE data? The Core PCE price index is defined as personal consumption expenditures, PCE, prices excluding food and energy prices. A measure of prices that people living in the United States, or those buying on their behalf, pay for goods and services. It's sometimes called the Core PCE price index because two categories that can have price swings, food and energy, are left out to make underlying inflation easier to see. Global market condition, week of January 20th. Markets are currently in a wait-and-see mode. The U.S. faces a looming government shutdown and policy uncertainty under the Trump administration. Europe is reeling from Greenland tariffs, while Japan enters a volatile election cycle under Prime Minister Takeshi. Commodity markets are high-extended, with gold and silver acting as the primary geopolitical hedges. Top expected stock movers, up. Exchange, U.S., NVIDIA. TSMC's record capex signals insatiable demand for AI hardware, U.S. Microsoft. Dominant cloud positioning and accelerating AI wallet share growth, U.K. Rio Tinto. Glencore merger talks and rising copper demand drive valuation, U.K. Shell. Record cash flows and rising oil prices support dividends, Europe. ASML. Massive target price hikes following high NASDAQ adoption news, Europe. SAP. Strong cloud momentum and uniquely resilient European software positioning, Japan. Toyota. Benefits from Sinonomics stimulus and a weaker yen trend, Japan. Musk. Rising JGB yields and bond rate hike speculation boost. Conditions and trends, U.S., U.K., Europe, Japan. The U.S. faces a rotation from growth to defensive sectors. The U.K. leads in M&A-driven resource strength. Europe is under heavy pressure from U.S. tariff threats, favoring local software over exporters. Japan remains optimistic as Sinonomics promotes fiscal stimulus, though the yen's weakness continues to trigger BOJ intervention fears. Anticipated news, forthcoming week. The January 23rd BOJ meeting is crucial for yen stability and global yields. Investors are monitoring the Davos Global Summit for Trump's trade rhetoric. Friday's U.S. Core PCE release will dictate the Fed's next move. Finally, the UK takeover panel's update on the Rio Glencore merger and the U.S. Supreme Court ruling on reciprocal tariffs will dominate headlines. Help us to bring you the best content possible. Subscribe, share, like, and comment.
This is the Stock Market Performance Playlist, the sound of victory. Peace.